What's up, everybody? Michael Silva here. You're watching the Daily Stock Market Brief. This is the show that I do Monday through Friday, 5 days a week. We use technical analysis to really get a good sense as to where the stock market might be headed next. Today's date, 11/16/2020. We're going to be looking at indices and indicators today, trying to keep this video pretty quick. At least 10 minutes, just trying to get a few points out. In the last couple market briefs, we looked at the bull case and the bearish case. Now the stock market is reaching again another all-time high on a monster gap up. Let's go ahead and get into today's show. All right, welcome back. First off, I just want to point out my website is up, so if you haven't seen it already, go to figuringout.money. The link will be in the description or in the comments section. During the day, I will be posting the market or the stock market dashboard update, and that's really just an intraday charts and kind of my thoughts in the middle of the trading session. You can follow me on Twitter. You can follow me on Instagram. I post it there when I do the update, so you're notified. We're going to start off looking at the indices today, and really what I want to kind of wrap everyone's head around is, where do we stand in the stock market currently? Is it a time that we should be jumping in? Is it a time that we should basically be, selling into this market? Is it something that we should just kind of sit on the sidelines and wait for the dust to settle? Well, that is ultimately going to be up to you to decide, but I'm going to be showing you some charts from a technical perspective. We're going to be looking at the data and kind of determining what we should do or what would work best for our situation. So we're going to start off by looking at the S&P 500 on the weekly time frame. We've seen this chart many times, this broadening wedge megaphone pattern. But what I wanted to point out here today was just this red trend line that I've re-added. That's going back here to early 2018, and as you can see, it got rejected there, rejected there, rejected there, rejected there, rejected, and now we're coming back up into this upper trend line, and it's just above the megaphone or broadening wedge pattern. So this is context. This will help give us context for the week so far. We're disconnected from the 5 EMA. We're running into resistance. Kind of broke out of some, but we're also on the very upper portion of the Bollinger Bands. Sometimes when we get to the upper portion of the Bollinger Bands, what happens? Well, we see pullback there. We saw a pullback there. We saw a pullback here. However, what I would like to point out is sometimes we can just stay overextended for quite some period of time as well. Now, this move right here is pretty vertical, but it's not as vertical as from here, which was in November, all the way to where we are right now towards the end of, mid-November. So just a couple of weeks in. That really, that was probably late October, into mid-November right there. So we have 3 weeks of data, 3-week candles. I'm rambling on. Let me go to the smaller time frame. S&P 500 on the daily time frame. And we have the VIX below us. I inverted this scale. Why did I do that? Well, sometimes it's just easier to read when I invert it. If you're interested in inverting it yourself on stockcharts.com, you can just write a -$VIX and then it inverts it for you. Really, what I wanted to point out here was, yes, we broke out of the symmetrical triangle. We back tested. Now we're moving higher. We'll go over some indicators as to why, maybe we should be pumping the brakes a little bit, but we'll wrap around that on the conclusion. We have 1, 2, 3, 4, 5, 6 gap ups. The majority of this vertical move is built on the back of basically post-market after hours being just pushing us up higher. Now we're moving into that upper Bollinger Band. We're disconnected again from the 5 EMA. Mind you, today is Monday. Tomorrow is Tuesday, which is known on Wall Street as Turnaround Tuesday. All right, we have a bull pennant right here, which in theory is a bear pennant or a bear flag. Just so you know, we inverted it, but we'll just call it as it is right here. So if we start breaking above this, that's going to start trying to close the gap that we'll go into on the daily time frame on the indicator for the VIX. But just wanted to point out that, OPEX coming up, and we have the VIX getting crushed a little bit. It looks like it's going up, but really it's going down. So volatility is decreasing. We're at 22.5. I can see us very well potentially shooting up more towards 27.50. That's a strong possibility still. I have it as this kind of ascending triangle, but you could draw a line straight across as well to make it more of a bear flag. And then, like I said, we have resistance up ahead right here and then that gap. So we'll see here in the next few days what the week presents to us. Here's the SPX on the 30-minute time frame. Only thing that I want to point out here is the negative divergence, both on the stochastics and the RSI. And then we have it running into the all-time market high, which is, don't quote me here, I don't know the exact number. I always mess that up. 36.45, probably right around there. So yeah, we might get rejected there. And notice the upper Bollinger Band is right there too as well. Then you mix it in with the negative divergences. So something to keep in mind when we go into trading and or, swing trading, investing, whatever the case may be. Let's look at the 15-minute time frame. 15-minute time frame. I redrew out a couple of things here. One, the pattern overall. This is kind of rough, but ascending triangle, you can see clearly all the gaps to the upside. And then we have a rising wedge inside of this ascending triangle. Is it possible that we reach up to the top on a negative divergence here and then we start filling in these two gaps below us and potentially bounce around and then maybe move higher? Strong possibility. Also, keep in mind the VIX down here on the 15-minute time frame. This is not inverted. You can see the bear flag here. We have a gap above us, gap on these time frames. So a lot of the times, just so you know, VIX gaps do get filled, and most of the time on the S&P 500 and the other indices, gaps do get filled as well. Not all of them, but a majority do. And when you see movements like this, just extreme movements, it's likely to get them filled. So do I think that the market's going to crash and fill all these gaps? I don't know. It's too hard to tell right now, but what we can do is prepare ourselves to make strategies and plays around these gaps, because sometimes when they come down, they can act as areas of support. And then it also helps us be prepared for if the market were to really start rolling over, at least we know, hey, well, this makes sense to us, and we're more proactive than reactive to the situation. Let's now look at the Dow Jones. This is crazy, like straight insane crazy. Like, look at this move. Holy cow. 26,200 to basically almost 30,000 in like just a week or two. Just insane. 1, 2, 3, 4, 5, 6, 7 gaps. If I were to move all these boxes together, this entire move was really built off the back of these gaps. And then during the day, the market just goes up and down, up and down, and up and down, and makes it very hard for traders to really get and catch momentum. So what do we got going on here? First off, stochastic overbought. It's overextended to the upside. And then we have just a monster day, right, in the Dow Jones. Up 470 points. Once again, just so you know, these type of days up 470, that's not supposed to be normal, seeing the Dow Jones move this much. So boom, to the upside. This doesn't last forever, okay? Eventually you run out of fuel and then it comes back to fill it. Stairs up, elevator down. These are some pretty steep staircases, okay? It'd make a good workout if you're on a Stairmaster right here. There's Coco in the background barking at somebody. Okay, and then also I want to march out the RSI is getting into the overbought territory as well, moving into that 70 marker. So disconnected from the 5 EMA, moving to the top Bollinger Band, oversold, overbought, and then also on the stochastic as well. Not probably the best time to go all in right here. Just my guess. Here's the Russell 2000 double top taking place. RSI overbought. Gap. We're seeing a very similar story here. And then the stochastic also in the overbought, overextended territory. It can stay there for a while. Same with the RSI, just so you know. And then we have upper Bollinger Band, which is more shorter term corrections. And then the 5 EMA, which is more frequently tagged. So we're just overall, I'll talk more on the conclusion actually about, what this all means to me specifically. Okay. And then the NYSE, I don't really bring this up. The NYA, NYSE Composite Index, it's very important. But what I want to just show here is RSI getting moving into that overbought territory. It's done it a couple of times here in the past few months. Then our stochastic, bearish divergence. Yes, you can see all these gaps to the upside. Oh, and you'd be like, oh, well, they didn't fill these gaps. Well, look at the difference here. 1, 2, 3, 4, 5, 6. Very similar to the other ones. Very, very big vertical move to the upside. And when you get vertical moves, boom, they come down pretty aggressively too. Now, what I wanted to point out that this looks so similar to was back here in May to June, where we saw all these gaps to the upside, and then you saw that boom, really big just move to the downside. So maybe we're preparing to see something very similar like this. And what's interesting is it moved up all those gaps to the upside. RSI got into that overbought territory and then boom to the downside. Now we're getting this very boom, 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 boom up to the upside. Where's the resistance? Well, the resistance here was right here where it bounced and then found resistance and then went down lower. Now we're moving into the all-time market high. Notice this just closed the full gap. Actually closed above this gap. I mean, the previous couple of days here too, it came and closed it, but we're above this red trend line. We're kind of in this camp where there's going to be a lot of resistance moving into the all-time market high, creating, you know, somewhat of a hanging man candle, and on the top of this upper Bollinger Band, disconnected from the 5 EMA, overbought, negative divergence. I mean, you put all the pieces together. Is it right now a time to go long? Would you trust going long right now? I personally wouldn't, and that's why I've been waiting it out actually since down here, which makes me look stupid, or it's going to make me look brilliant if this thing rolls over. So it's just how it's just how you really, I guess it's just, what's the word that I'm looking for here? Just how you perceive the market, or how you perceive the charts, or how you perceive the decisions. What I said earlier today on my market dashboard, I was like, yeah, it sucks to miss on these big moves to the upside. And, I caught some of them, so I didn't miss it fully, but let's just say I miss it all the way to the upside. What basically happens is a lot of people, get a lot of fear of missing out. The FOMO starts sinking in, and they want to rush into the market, be reactive instead of proactive, as I mentioned. But I want everyone to remember here in March, okay, this is only like 3 weeks, and this wiped out 4 years of gains. 4 years in 3 weeks to the downside. So am I really worried about, a week and a half of moving vertical in the air? Not really, to be quite honest. Not really at all. Let's look at the indicators. Indicators, I'm probably running a little bit long on time now. Again, I always do that. VIX, bear flag. We've been talking about that. It's getting crushed to the downside. Will it come down, reach down to this lower Bollinger Band, potentially even close this gap? Hey, that would push the market a lot higher probably. Maybe that would push it all the way to that 4,000 range. I don't really know, but the market has been in this vertical crazy movement. I will say, though, if it gets down here to fill the gap or reaches this lower Bollinger Band, chances are that's going to be an overextended move. And then I would really, really consider putting on a strong short position on the various indices. Here is the NYMO. The NYMO, we've been matching it up to 2018. It's not quite matching up as of right now, but what we did say was, hey, it had a double bottom here. What if it reaches up here to have a double top? Look at that. We're here at a double top. A little bit of a divergence taking place. We have a higher high. And then, I guess this is a higher high too as well, so it's not really a positive and or negative divergence taking place. I guess if you actually mark it from back here and you march it down, then that would be a negative divergence, but that's besides the point. Let's look at it as just from a double top, overextended to the upside. When it did that here down to the downside, what took place? Well, when it was down here, boom, it shot up, okay? So maybe when it gets up here, boom, maybe it shoots down. I don't know. Well, we're just reading the chart for what it is, okay? Here is the NASDAQ, 100% of stocks moving above the 200-day period moving average. What does that mean? Well, it means 88% of the stocks in the NASDAQ 100 are above the 200 period moving average. That's the Godfather moving average. Pretty high up there, 88%. A lot of people say, no, that's distorted because of the March. I'm just reading it for what it is, okay? 88% of the stocks are above the NASDAQ 100, 200 period moving average, okay? That's a lot of stocks above the 200 period moving average. That means a lot of stocks could be moving into areas of resistance. Last time it was up here at these levels, we saw it move down to the downside. So we're going to be keeping an eye on that. Let's look at the SPX, both the 200 period moving average and the 50 period moving average. I talked about this on the last market brief from a more bearish point of view. When they both reach up to these 80 to 85 levels, we see some big drawdowns. And yeah, everyone says, or some people say, well, because of the crash, that distorts it, and then they moved above it easier, and yada, yada, whatever the case is. It doesn't change the fact that still 86 and 89% of the stocks, so 89% of the stocks in the S&P 500 are above the 200-day period moving average. That's a lot of stocks above the Godfather moving average, and 86% is a lot of stocks above the other Godfather moving average right there. So big, huge vertical aggressive move through this. That's another thing you want to pay attention to, is how it was down here not too long ago, okay? That's not in March. Okay, we're down here at like 25, and then boom, just a very vertical move to the upside. Down here, 60, boom, to the upside. So very, very sharp, aggressive move. That is what's important here. All right, now let's look at the BPNDX. This one, I like to look for overextensions. What does this mean? Well, it means 70% of the stocks in the NASDAQ 100 are on buy signals. Okay, buy signals. This is based off of point and figure charts. And, if you don't know what that is, whatever, it doesn't matter. What we look at is overextensions and bullish and bearish divergences. Right now it's at 56. So this one's not really telling me much right now specifically. Yes, it's still a high reading comparatively looking back through history. Yeah, it's a high reading, but it's not overextended by any means, which means that, hey, the market still might have room to run. Now, when I look at the S&P 500, a little bit different of a story. This is the BPSPX. What, Mike? There's one for the S&P 500? You never showed that before. You're right, I never have, but I'm showing it now. We're at 65.70. Clearly, you can see we're moving into that overextended territory. So that could be a signal that we're getting overextended to the upside on the S&P 500. So something to consider. Let's get into the conclusion. Okay, so what did we talk about today? Really what we talked about was just where we stand from a perspective of should we be going long right now? You know, have you missed out on a big move? If you haven't been in the move, you missed out on the big move because chances are you're not going to see this just duplicate itself. Can you? Absolutely possible. Is it worth the risk? Probably not. So overall, we're running into some very, very high levels of resistance. Our technicals and our indicators are saying, hey, things are pretty overextended at the very moment. So what do we do as a trader or investor? Well, we can start looking for one, areas to potentially short, or two, areas that the market can pull back to, and then you could set up good risk versus reward trades. Why am I not scared about missing out on these moves overall? Well, simply because this is not a game about becoming super rich, super quick. This is about protecting capital. And I've done a pretty good job at protecting my capital over the years. And that's what's the most important part of this. If I can get 5, 10, 15, 20% here and there on these certain trades or whatever the case may be, that's good because that helps the compound growth of the portfolio. And sometimes when I make even overextended gains, I like to just take that money out and sometimes, one, spend it on myself to realize that, hey, the money in the account is actually real money, not just some number on a screen, right? Or I like to take that money out and invest it into other physical type assets so you can hold and see that you created something from nothing. It's a great thing about trading, and I plan on actually, when I get back into my day trading show, which I had like 80 episodes of it or something like that. But when I get back into the daily episodes, what I plan on doing is extracting the gains and then moving them into what's called a money tree, where I can show you growth, a tree that's prints out dividend income over the course of years and years, where I wouldn't really sell it. But for example, if I made $50 in a day, I can go buy $50 worth of a certain share or multiple shares and then have a dividend income for life. So that's going to be kind of interesting what I plan on doing around that. So that's later to come. Like I said, everybody, just to wrap it up, we're extended. Overextended. The market's crazy. We're getting hyped up on all this vaccine news, but there's also a lot of talks about lockdowns again. Okay, California governor just came out, and I'm in California, and slipped in this, wording about, hey, we might be doing a curfew again, and he was out at a birthday party or something like that, going against everything that he's been saying, and he came out and apologized and said, oh, I shouldn't have done that. It's like, you knew what you were doing, you just got caught. A bunch of crud. Whatever, guys. That's all I got for you on today's daily stock market brief. Everyone have a happy and safe night, and see you later.